Was really good. Was really good. We back at it again. You already know what it is. Um, New setup, new crib, and all that. But yeah, we're gonna do this side view right now, so I can get my camera stuff situated. Um, Besides that, today's video is gonna be on supply and demand. Been waiting. Been waiting. I know y'all just saw the little title on the thumbnail. I was like, dang, we finally put it out. Yes, we finally put it out. Because I'm tired of, I trade supply and demand. I don't do that support and resistance, beginner, retail trader stuff. Like when you just start trading, that's cool and all. But moving forward, need to advance, I'd say a few months and not even that many months and transition to supply and demand. And I'm going to show you why. So, um, if you've been watching my videos from the jump, you're probably already about a month to 3 months in. We'll say something like that. And yeah, it's just been a bunch of beginner concepts, etc. Now we're starting to move on to the more advanced things. I'd say we honestly started moving on to the more advanced things, quote unquote, once I had that market analysis video. But yeah, so we're doing supply and demand. Things you're gonna learn is what supply and demand is, what fuels it, what creates them, and what you can expect from it, and how to indicate which one, like which supply or demand zones you should be using, because it's easy to end up charting a whole bunch on there. And then you'll also learn about what confirmations that you'll get once it touches those zones that let you know that it's either going to fail or it's going to work. So, handful of things, but promise you it's not going to be that long. We're going to try to get through it quick. We're going to try to get through it quick, but not too quick to where you don't understand. All right, so supply and demand. Supply and demand are, oh yeah, that's another thing. How to chart them and place them and where to find them. So supply and demand are key areas, POIs, just like a handful of other things that, and like support and resistance, once price gets to this area, it's expected to not break past it and continue downwards or reverse in whatever direction. And that's essentially what it is. So supply and demand are key areas that are placed around big impulsive candles. So big impulsive candles are like this big bearish candle or this big bearish candle. Those are impulsive candles, big gigantic moves, usually are also cause imbalance, which is what leaves things called fair value gaps. And from there, once you are able to find those, so right now we're going to be doing these two, and I'm going to try and find a buy side example. From there, you want to find the impulsive candle, which is this big bearish candle, and you want to chart up the previous candle. In this case, and in this case, it's wick to wick. So you want to place it at the bottom of the wick and at the top of the wick. Other times you may not have a wick, or you might have a slight wick, whatever. In that case, regardless, you just want to place it all the way at the top of the candle or top of the wick, and then all the way at the bottom of the candle, bottom of the wick. And from there, in this case, this is your supply zone. Right now we're in gold USD because it's the best example I can find for this video. But yeah, so there would be your supply zone. A demand zone would get placed. So a demand zone would get placed the exact same way. So again, you want to find that big impulsive candle. So that could be like here or in this in general area, because these are two pretty decent sized candles. You can even do it like that or just strictly do this one. And guess what? Price went right into it, completely rejected off of it. That's what we like to see, right? And yeah, that would be your demand zone. We'll take this out for a second. So that would be your demand zone somewhere within this area. So you could chart up from this top wick to this bottom wick, or just this one or here, regardless. The candle sticked right into it, didn't break it at all, and rejected straight upwards. So these would be your supply and demand zones. All right. What are supply and demand zones, and how are they formed? Supply and demand zones, think of demand as in a product at a store. There's tons of demand Therefore, so the store buys a ton of product because there's a ton of demand. Therefore, once all those people get in that area, they try to buy it all. They try to buy it all in bulk. That's what the big banks and institutions like to do, which is where those zones, which is where those zones come in, because those big impulsive candles, unless they're from a news event, are from big banks and institutions buying orders in bulk. All right. And then eventually price is going to come up somewhere if there's already a supply zone in the area. So there's probably a supply zone up here somewhere. So we'll just say there was a supply zone up here. We'll just say there was a supply zone up there. Then price pushed up, hit that supply zone, rejected, and went down. Now the supply zone, I think people that are trying to sell the product, because with trading you're just buying and selling positions. It's just a bid and take and trade. That's all it is. And yeah, so that would be just the basis of your supply and demand. And again, it's the big banks and institutions that are forming and causing those big impulsive moves. Those big impulsive moves. So then when it comes back to it, it could form another big impulsive move. All right. And once you understand that, you can expect things like I mentioned earlier. What you'll expect to see from these are big trades, and big trades, strong trades, and quick trades. So now that we know where to spot them, how to find them, what they are, and what fuel them, now we need to know how to trade them. All right. So we'll start with this sell side example right here. So after this big push down, these big impulsive candles, we charted up a little zone right here. All right. Making that our supply zone. Because of this big impulsive move, we can expect price to get here and give us another big impulsive move. So we wait patiently to come up and do what it needs to do. And guess what? Tapped into it. Rejection, slight rejection, rejection, and rejection. Started pushing downwards. All right. And then it came up again to retest it. So you could have entered off of this rejection at first, or you could have waited for the retest. Because there are two ways you can go about supply and demand zones. You can go about supply and demand zones, and this is what I used to do. I don't do it as much as often. Essentially, the moment it hits it, if it gives you an immediate color switch and starts showing you some pressure from whichever direction, you're in that. And I'll show an example either at the end of this video or right now of a trade where it gave me a color switch and boom, and it was a huge trade. Just to show you that it works. Or you can wait for the retest. In this case, it retested it, gave you that little retail trader concept, which is that double top right here. No liquidity was swept, but that's okay. Liquidity isn't going to get swept all the time. Had an issue like that this entire week. And yeah, so retested it again, forming that double top. And then guess what? Big impulsive candle. Huge move. Unless it was showing momentum from up here and then you eventually entered, this is a big stick and you would have gotten an entry all the way down here. You might as well have just not taken the trade. But for me, if I didn't enter over here on this immediate color switch and this sell side pressure just from that long wick and it pushing the price all the way down here, then I would enter it somewhere in the middle here. So we'll just do an estimate. We'll just say, what I just placed? I don't even know. Sorry, I thought something happened to my internet and it stopped recording. But let's say you entered around here. All right, put the stop loss either, depending on how tight you want it, how risky you may or may not be. That just really just depends on the type of person you are. But you can keep that stop loss really tight right here, and have a good look on that RR, or you can just put it above both highs. Regardless, doesn't matter. We'll just put it there. Sorry for my been glitchy. I gotta use a hotspot because the Wi-Fi ain't up yet. The new crib. And you just put at the next key level. All right. Guess what we have right here? Big impulsive candle. We could have charted that up and we could have made that our demand zone. All right, and we could have took it here or took it right at the last point price was, or we could have even put it a little further just because there's liquidity there that needs to be swept. Therefore, and we already know what the market seeks, which is liquidity and balance, and we could have took that. That's how I would have taken it. And a cool little 1 to 3, somewhere between 1 to 3 and 1 to 5 RR, depending on how you want to put your stop loss. All right. Another area that you could have put it, because from earlier that I had charted up, is right here, which will go into one of the second of three examples of just what to look at, which is a supply zone turning into a demand zone. So just like the support and resistance video, where it's like I support resistance. If it breaks resistance, then resistance becomes support, because now what was at the bottom is now above where price is. It's the same thing with supply and demand. This was a supply zone. If it did its job, it should have just broke it or swept liquidity up here like it did here, and then you could have took that sell position right there all the way from we'll just say there all the way down to here. Nice little trade. And eventually it fully broke through it, making that a demand zone. All right, and if I can get this charted fully better, as you can see, let's say you did put your TP down there. All right, boom, we'll say 1 to 7 because it's basically 1 to 7. And hey, that's a nice trade right there as well. All right, and that's simply called your blind spots, because you always want to check your blind spots, because you don't want to be taking a trade in an area that, oh, there's a demand zone or a supply zone or whatever you want to trade, whatever. You don't want to be trading and trying to hold it to a certain point, and guess what? There's something blocking there, which is a POI, right? So we'll get rid of these two. As you can see, this demand zone kind of played out a lot. But eventually when it came down here, guess what? Demand zone. So you can put one right here, you feel what I'm saying? And boom, tapped into it, immediate rejection, pushed straight up, all right? Eventually it melted through, but guess what is also in the area? Another supply zone. A lot of your supply zones can be really small or really big. And this is just me simply doing off the 5 minute, because you can chart it with the thing that's the great thing about supply and demand is not only can you chart it and should you chart it on the 4 and the 1 hour and use the 5 and 15 minute for your entries like that market analysis video. But let's say you can't find anything on there, you can do this on the 5 minute time frame and it still works the exact same. So as you can see, gave you that big push, boom, 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 and then tapped into this supply zone instead of this one. This is the new and closest supply zone, making this an extreme supply zone, which means this is a less likely area for price to come back to. All right. And then the moment it tapped into that, just selling, selling, selling. And eventually it formed another supply zone within this demand zone, making that supply the demand. And it tapped right into it because right here formed another supply zone. Big one, but yes. Or you could have just used this demand to supply zone. Guess what? Boom. Just like that. Stuck it again. All right. And that's just multiple trades after multiple trades you could have took. Should you take that many trades? No. But could you have taken that many trades? Yeah. You feel me? Matter of fact, we even had a supply zone. We even had a demand zone right here. Price tapped into it slightly, just like that. Boom, pushed all the way up, but it hit that supply zone. Retested that supply zone, just melted straight back down. So now that we know, again, what supply zones are, supply and demand zones are, what fuel them, what create them, what you can expect from them, how to chart them, how to look out for them, where to spot them, and ultimately how to trade with them. Because you could have taken a buy position here the moment it starts showing you that buy side pressure and put that stop loss below there. You could have took it up to here. All right. Guess what? Then we can flip it. Actually, no, you could even take another one right here. Moment starts on that buy side pressure, boom, take it to there. All right. So let's just say, I mean, these would be not smart, just considering it's most likely a sell side market. But let's say you wanted to be risky and did it. All right, that's a second trade you could have took. Money. All right, right here. Came to retest that. Tested a supply zone here and retested this demand to supply zone. You could have took it at these rejections. So we'll just say up there. All right, put that stop loss above those right there. Hold it to the next key level. We'll just say there's most likely a strong demand zone within this area. All right. And then guess what? Another supply zone. That price is about to touch. And guess what it's going to do when it touches it? Sell. Unless it melts through it. All right. But that's all of that stuff. The last thing that we're going to go over is how to tell if they're going to work or not. Right here. All right. Boom. So price came up, swept liquidity right there. So you're already expecting a ton of sell side pressure. As you can see, we had a big bearish candle and a full body candle at that. So you would have charted a supply zone right there, and you would have held it to the next key level. Wouldn't be there. So we'll just say somewhere around here. All right, let's just say somewhere around there. As you can see, price came up and retested. 1 rejection, 2 rejection, 3 rejection, but multiple rejections within the in general area, because it's an in general area, not just strictly that zone. And it spent a ton of time in there. All right. And then guess what? It came up to form that double top and give you a even more of a retest. And guess what? If you were to have entered in this trade, we'll say around here. Yeah. Stop loss here. You would have got stopped out. Stop loss a little steeper, which would have been a smart decision unless them spreads are super high. You would have been perfectly fine. All right. But it spent so long in this zone. Matter of fact, both of the examples I'm going to explain how you know if they're going to fail or not is right in this example. The two examples are it's spending either a really long time in it, like I said, or it breaks in it or breaks through it. As you can see here, it spent a ton of time. Let me get this out the way because I hate when it does that. So as you can see here, it went into it, pushed down, broke that high. It should have kept going, but it didn't. It came up again and started consolidating. It's spending this much time, and this is probably like an hour and a half, if not more. Like this is from, since it's been in the supply zone, for actually from here, which is, can't even see. I think that's at 2:30. I can't see. I got my cross in front of my screen. Somewhere between 2:30 and 4. So an hour and a half, like I just said. Spend an hour and a half in there just for it to push back up again, stop people out, which hopefully that wasn't you and you had to stop loss at least high enough to not get stopped out. And then it started feeling that sell side pressure. Oh, it's going to do it. It's going to do it. No. It broke through it and spent tons of time within there. Matter of fact, actually, no, I'm sorry. I spent from 2:30 to, we'll say right here, to 4:30. So that's 2 hours before it started giving you that sell side pressure and forming a lower low. Than here and showing that it's going to start selling and keep going downwards. It's spending that much time in it, and amongst that breaking through it, that lets you know it's going to fail. Oh, well, the liquidity, you might feel that sell side push. Yeah, sure, but that's not a guarantee because next video out is going to be liquidity. I'm tired of bringing about liquidity, especially if you don't know it because I haven't gone over it, if you haven't seen the video. But essentially, it's just like a rat race with liquidity. Here, sweeps liquidity to stop people out and put people in buy positions because they think it's going to buy once it breaks that high, stops them out, puts people here in sell positions, stops them out, and stops the buyers out. It's a whole cycle. But that's a whole different video. But again, it spent so much time in there and broke through it, it clearly wasn't going to work. And let's say you did get in there, or maybe you got in, we'll just say you got in here. All right, guess what? Boom, stopped out. And then you would have tried to skedaddle your way trying to get back in because, oh, sell side pressure, and then boom, stopped out again. what you should take from this video, if you don't already know, is everything. This strategy works. Supply and demand strategies work. Everyone uses supply and demand. Only people that don't use supply and demand are other people who I couldn't even tell you, because everybody that I've seen, etc., including myself, use supply and demand, and it works. It gets you to get put into positions and put in trades that can be really long. That can go super far in a very short period of time, just because of that buy side or sell side momentum, compared to these really slow trades that might take 3 to 5 hours. You feel me? It's gonna be a reiteration, not a reiteration, but an add-on to how to tell which supply and demand zones are going to work. Because on multiple accounts, so like I said here, I was like, oh, you got a demand zone here and here. So let's say there was a demand zone here. All right. Let's say there was one here, and then there's one here. All right. Oh, well, I got 2 demand zones. I don't want to interrupt here because it starts projecting and then it pushes down, stops me out, and it's super far away. But I don't want to try and wait for here and I miss out on the trade. All right. Here's how you identify what they are. First off, you have a demand zone and an extreme demand zone. Price is more likely to come to the demand zone, which is the closest one, compared to the furthest one, unless the closest one is failing or liquidity hasn't been swept in the process of getting to these demand zones. That's one way to look at, okay, which demand zone do I go off of? The second way to look at it is the candle size. As you can see, this candle is completely bigger than this candle, meaning there's more momentum and buy side pressure within this candle than there was in this candle, letting me know that this area is going to be stronger. So when you go to chart up and you see, oh, well, there's a demand zone here, and oh, well, here, and then here, I can even, like, here. All right. Yeah, it worked in the moment, but there's no telling when, actually, matter of fact, yeah, when price came down, guess what? Boom. Failed in the first one. All right, so then we rely on the second one. Worked in the second one, the extreme. All right. Pushed down, sweeping liquidity. All right. And then guess what? Pushed back up. It's coming down the retest, most likely. It's probably going to form a market structure shift, and there's probably most likely a flip zone within this area that is going to come and retest and then push upwards. Or it's just going to continue going downwards whenever it taps into one of those supply zones and etc. All right. But yeah, so that's how to chart it. That's everything. That's just everything about supply and demand. Again, it's a great strategy. I'm gonna show some examples. Either I've already showed examples in between some of these talks, but I'm gonna have it at the end of this video. But I'm gonna have some examples of a lot of my trades using supply and demand, and just seeing like, dang, I could really take that big of a trade and it could really be finished that super quick, and I can make that much money. You feel what I'm saying? So yeah, so I'm gonna put some stuff at the end of the video if I haven't already put stuff in between the video, just to show you that it works. I got my gram in my bio. I post all my trades live. I post all my trades live on my story, and then I record them and post them on my gram as well. So you can always see my trades, and I'm transparent. I show wins, losses, etc. I'm not some scammer who's gonna, oh, I'm only gonna show you the wins. No, I'm transparent. I'm gonna show you how it is. I'm gonna show you how trading actually is, and that's what I want to do. Right now, soon I'm gonna go public with it. I'm trying to start up a little company, a little business, trying to help people out, do one-on-one sessions and risk management consultations, and maybe a few other services at very fair prices. And first, starting off with a free trial, just so people can get a feel and see if they genuinely like me and trust me, because and in the process understand that they'll get the same value as these $500 to $1,000 courses that they will with mine, which are nowhere near that expensive. And my man of God, I'm not gonna lie to you, and I just want to help people out. It's a God-given gift, an opportunity, and I want to share that with other people who are willing to, and show me that they are willing to actually learn. So that's gonna go, try and get that published soon. We're gonna see how that goes. But yeah, that's everything on supply and demand. I'm gonna show you some examples in a little bit. You can subscribe, like, go to the gram, whatever you want to do. I'm trying to help some people out. I'll see y'all.